Today we're going to take a quick look at PayPal. This is a stock that's down over 60% year to date and over 75% from its 52-week high. So in today's episode, I want to do the following. First, I want to take a closer look at some of the bearish points affecting PayPal right now. Why is the stock price down so much? The second thing, more importantly, and probably my favorite, I want to take a closer look at some of the bullish thesis behind the stock and maybe why long-term investors might be excited to own it. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, and also check out my tech channel. So let's get started. All right, if we take a closer look at price action, right now it's sitting at $71.47. Like I mentioned, year to date, the stock is down roughly 63.3%, and from its 52-week high, the stock is down roughly 76.8%, currently sitting at a market cap of about $82.7 billion. All right, so first let's start off by looking at some of the reasons the stock price is down. I want to say probably some of the main reasons is just the deceleration of growth and the compression of their margins. Here we can take a closer look at their EBITDA margins between July of 2020 and January of 2022. It does seem like their margins were a little bit above average, actually a nice amount above average. We can also see during that time frame there was also a bigger boost in revenue growth compared to normal. And we know during that time frame there was an increase of things like stimulus paycheck which helped consumers spend more money. And obviously a company like PayPal, which is one that depends on transactions, did really well. If more people were doing online transactions, then PayPal was making more money. And then that's where things go bad. Now that kind of consumer spending is decreasing, we're kind of hearing of high inflations, high interest rates, consumers are not spending as much money, and of course this will cause a pullback on transactions happening, reducing the revenue of PayPal. Other things affecting the stock is just the overall bearish sentiment that a lot of Wall Street analysts have. For example, most recently on June 22nd, Credit Suisse lowered PayPal's holdings price target to $95. We have also seen numerous reports of companies either slowing down hiring, freezing hiring, or reducing their workforce. And PayPal is also seeing that with a report on May 27 that PayPal lays off employees as obviously growth slows down. Finally, I do want to say this fintech market is pretty kind of competitive. There's a lot of competition in here, and we can see here on June 16th, we kind of heard that Apple was kind of entering the buy now, pay later sector, which again increases that competition for a company like PayPal. So pretty much those are all the kind of negativity affecting the stock price right now. The bearish sentiments, we're also seeing a decrease and compression on some of their margins and the acceleration on revenue growth. Finally, we are also seeing a kind of an increased competition in this market space. I want to thank the Motley Fool for sponsoring this video and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service. So what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. But now let's take a closer look at some of the bullish reasons. I do want to say if you are a PayPal investor, go to their investors relations website and listen to this Bank of America Global Technology Conference. It's about a 40-minute kind of webcast that you can listen for free, and it's PayPal kind of answering a lot of their future growth potentials. Again, I'm only going to cover a little bit in this episode, but if you want to learn more and be a little bit more bullish and excited of the company, feel free to listen to that. But inside this conference, leadership mentions a few things. First, they're mentioning how this is a company that depends a lot on transactions. And one of the things that they're trying to do is increase their kind of checkout rate, which is already pretty high. But they are explaining some of their innovative ways that they are going to improve that metric. The second thing they kind of mentioned a little bit is why they entered the buy now, pay later segment. I want to say at first I wasn't a fan that buy now pay later services was kind of becoming a big thing, but unfortunately it is very big for consumers, and a lot of e-commerce stores were kind of putting these buy now pay later services on the front of checkout. So for PayPal to make sure that they were always either on the front page or always in front of the consumers, they had to kind of enter the buy now pay later, since this is a company that deals with transactions. Not only that, they also talked about their super app and how the
acquisition of Honey, for example, was a huge push for them to be able to kind of create this super app. And finally, at the end of the webcast, they do talk about Braintree and how this is a huge growth potential for the company. So again, if you are an investor, I really recommend you check that out. So now let's take a closer look at their most recent earnings, which came out on April 27, roughly 2 months ago. So here we can take a closer look at some of the metrics that I find very important. First, active accounts. They have 429 million accounts, up 9% year over year, and they did add about 2.4 million accounts this quarter alone. We can see customer engagement is also increasing, about 47 payment transactions per active accounts. That's up 11% year over year. Total payment volume, which again I do believe is super important, is 323 billion, up 13%. If you exclude eBay, is actually up 17%. Their revenue is growing at a slower pace, 7, but again, if you exclude eBay, is up 15% year over year. So again, I do want to say the things that matter are going up: active accounts, customer engagement, total payment volume, and revenue. Again, this is a company that depends on transactions, so the more active accounts, the more customer engagement, the better it means for the company. Unfortunately, like we saw, this company is seeing kind of a compression of some other metrics. For example, non-GAAP earnings per share were down about 28%, and their free cash flow was down about 32%. But again, we kind of mentioned a little bit of why those headwinds are affecting the company at the moment. This company is also constantly adding new solutions to their customers. For example, on June 28th, PayPal cashback business credit card launches for United States small business, and we can see here on June 15th, PayPal introduces Pay Monthly to give consumers more choice at checkout. Again, this is a company that's really focusing on being the leader at checkout because that increases transactions, more revenue. And in the past few months, we have seen this company kind of improve their crypto solutions as well. And even though you might not be bullish in crypto, at least it gives them the optionality that if this market does take off, that they have some form of skin in the game already and are not left behind by some of the other companies. If we take a closer look at financials, this company has about 9.2 billion in long-term debt, but they have roughly $8 billion in cash and short-term investments and about $5 billion in free cash flow. So overall, this company financially is in a stable space. We also see that PE ratios don't seem too crazy. Forward PE ratio is about 18.33. I do want to say, if I wanted to increase my exposure in the fintech market, PayPal is definitely one of those stocks to be in. Like we saw, this is a company that's increasing their active accounts. They're also investing in the future of their business by making good acquisitions and just improving their overall technology. They are also increasing customer engagement, which is very, very important. And also the Amazon deal, which unfortunately is taking a little longer than expected, should happen in the second half of 2022, which can overall help this company again increase those transactions. Like we saw, this is a company that has a lot of headwinds in the upcoming months and maybe even a year or so, but like we saw, there are also a lot of bullish points for this company. So for me, I do have a position in PayPal, and at these levels, it wouldn't be the time where I would buy a lot. Like I mentioned, there's still so much short-term pain that could happen. For me, I'm more of a dollar cost averaging, and again, this is not a company that would be more than 2 to 3% of my portfolio. Again, that's just my style. It's different from everybody else. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.